Now this is boom 500, and I've been on this trade for quite some time now. Okay, I've been on this trade for quite some time now, and I hope to flip my account, of course, with this single trade. Okay, with this single trade, I hope to flip the account because I'm looking at something that is happening on higher time frames and on H4 and of course D1 precisely. Now look at it. Now you see where I placed my stop loss. Now I'm going to show you what informed my decision, and that's nothing else but from the Fibonacci experience, from the Fibonacci knowledge. Now, even if I don't trail this trade for days or so, I can decide to take my profit whenever I'm satisfied. But if it's about pushing down, I'm pretty sure this very pair is going to push down. Now, let me quickly bring in the Fibonacci tool that I gave you the setting the last time. And of course, you remember the CN grade cancels level. Okay, I'm going to show you what is playing out here right away. But before we do that, I'd like you to take just a minute to hit that subscribe button if you are new on this channel, and of course turn on the notification bell so that whenever I upload a new video you get notified. And if you are an old subscriber, many thanks for coming around today once again to click on this video, and I'd like you to give this a thumbs up, like. Also, don't forget to always share our contents with other traders so that we'll get to larger number of audience. Okay, so without further ado, let me quickly pick my Fibonacci tool. Remember the setting, right? And how we do it on boom. Okay, on boom you are placing your 100 level, okay, at the beginning of the move that is retracing. This is the move, the beginning of the move. This is the move that actually retraced. Okay, now if you are choosing week, you do week to week, but if you are choosing body, you do body to body. Okay, now this is what I want you to look at. Take a look at this place. The move, this is the bearish move to this point that retraced to this point and now is pushing down. I don't know if you got the point. Okay, the bearish move, this is bearish move to this point that retraced to the CN grade cancel level and now is going bearishness back. Okay, now having said that, I want you to take a look at what is playing out here. You remember I told you, I gave you the ideal settings, and then I added this as the CN grade cancels setting. That is important. Critical level, the 78.4 and the 74.8. I told you guys to take those levels as one. Take them as one, because I've tested and I've seen that markets always, sometimes it bypasses the 50, I mean the 38.2, the 50% and the 61, which is the gold ribbon. Okay, the blue ribbon, or the premium, the most critical level of the Fibonacci. But I've discovered that there is another level that the market always respects, 78.4 and 74.8 level, and that's why I call it the CN grade cancels level of Fibonacci. Okay, now you discover what happened. The market made a bearish move to this point, and then it started retracing, and then I placed my Fibonacci, and I was watching the market to give me a signal of the end of the retracement and to begin to come down. So I waited, the market got to the 38.2, it bypassed it, got to the 50%, it bypassed it, got to the 61.8. there was no sign of coming back bearish way. Okay, and then the next level that was left was the CN grade cancels level. Okay, now if it has exited this point, then I would probably be looking at a complete reversal. Okay, but it didn't get to the 100. But sometimes even when it gets to the 100, it can reverse. That way it may be giving you a complete ideal double top, and then that would have also been tradable with the probability of it spiking up or still going down. Then your stop loss would have been above the two highs of the double top. That is if it eventually gets to 100. But now it got to the 78.4 and 74.8 levels, and I discovered the market started struggling around that area, giving me enough informed premise to conclude that the market is going to push down from that level. And you see what started happening, and of course combined with the weak rejections, and then my fractals introduced. How many fractals? 1, 2, 3, 4, 5 introduced. So it was enough reason for me to know that the market will push down, hence the trade. And of course, even though the market got to the 38 level while it's descending and it decided to spike up again, getting to the 50% level, it struggled, and I did not exit the trade. Now it's coming down. Now it's gonna push down. And let me also tell you another thing that informed my decision. I have a stronger hope. Now if you go to H4, let's go landscape now so that you see what I mean. We're going landscape, yes. Now if you go to H4, you're going to discover something. Now this is a critical level. The market made this level after it descended on a very long bearish move. It got to this point, it started ranging. It has ranged for several weeks now, and when it got to this point, it rejected. Price was rejected. It came down. It ranged, then it tried to move, and it attained this point today now. Okay, and then it's descending, and that's why I place my stop loss here, so that if it exceeds this point, pushing up to go above this point that it reached earlier, then I will know that the market is actually on a serious reversal and is going bullish. Then I will take the loss. But for now, if it doesn't go that way, I'm looking at the market coming down big time to I beg your pardon, coming down big time to retest this low. Of course, which is going to be somewhere here. And imagine the market going down on 4-hour time frame to retest this. That's why I told you I'm going to flip this account if it goes in my favor with this single trade. And of course the lot size is 0.3 cents. Okay, so that's why I say we combine a lot of things to trade. Now you see the Fibonacci level I placed on 15 minutes time frame. Okay, you can actually place your Fibonacci on any time frame. Okay, you can place it on any time frame. But I actually took this signal from this trade from the signal given to me from the 15 minutes time frame, and see how it's playing out, guys. Now imagine if I had used one standard lot size, or $5 or $2 or $15 lot size. This would have been running into thousands of dollars by this time. From here to here would have been running into thousands of dollars. Okay, and that's how we roll. Forex is real. Boom and crash is real and easy. All you need to do is to know what the market is doing at any point in time, and then you are good to go. So this video is not going to be that long, and I want to say a big thank you for watching this video to this very end. Don't forget that CFDs Castle's mentorship program is still on. I want to mentor you. I want to teach you to be a competent Forex trader who can analyze Forex. I mean, boom and crash, synthetic indices, whatever pair you're trading, analyze and place your trade. And then, of course, don't forget that whatever we do, we are not saying it with 100% certainty, because we don't limit the movement of price, but we predict with precision. We predict with high level of probability, and of course that makes us consistent in making profit from the financial market. So don't forget to leave your decent comment in the comment section below. Also, as I've always advocated, keep adding to your trading knowledge on daily basis, and then I'll see you on the top with your great testimonies. Bye for watching this video for today, and I'll talk to you when I talk to you next.